Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm going to look at some hyper growth stocks and how they've been performing since we've had this downturn here in late February. We've had a massive run up in a lot of small cap growth names over the past 4 or 5 months, as it seems like the internet just can't get enough of them. And it doesn't take you very long on YouTube to find the next person talking about, hey, there's a SPAC coming up, or this company just IPO'd and they're going to go to the moon and all those things. And while a lot of these companies, in my opinion, will eventually disappear, there will be some that actually go on to do really fun things. Now, for my portfolio, first of all, in my IRA, I keep 100% ETFs. I don't even screw around with standalone stocks. It's just a slow grow philosophy over there. Now on the taxable account side, which I've shown you my portfolio several times, I try to keep a balance of safer stocks and then those that have more of that hyper growth mindset. Now, not everybody would agree in what my safe picks are, but they include names like Visa, PayPal, TJ Maxx. I even have TAP, which is basically Coors Light beer, which is a dividend stock. So I've kind of landed on this barbell approach to growth investing. But the further it goes down the line into small caps, that's when I start to get nervous. I do look for companies that have at least a chance to be profitable within no longer than 2 years, really. I think DraftKings is probably my most debatable play when it comes to profitability, but I do anticipate that they will have profitable quarters in 2022. Maybe not the full year, but they will have profitable quarters in 2022. So for this video, we're going to check in on 5 hypergrowth stocks since the market has started bleeding out here a little bit. And I'll just give you my 2 cents on where I think they land. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before investing in any stock. And of course, if you like stock market content like this, please give the video a like, subscribe to the channel, all the things. Thank you very much for all the support I've gotten so far. All right, before we jump in, I just want to call out this gentleman on Twitter, Peru Saxena. Hopefully I said that right. He's a great source of information if you're looking for these so-called hyper growth stocks. And while Peru and I have very different investing strategies, I read everything he writes because he is usually on the cutting edge of hyper growth. And he's not selling a newsletter or membership or anything like that, but he just features some companies and his perspective on them. So definitely check it out. And for my list today, I actually pulled from one of his portfolio tweets. This one was from February 12th. And I just picked off some names that I was familiar with and or own. And those names are DraftKings, MELI, Palantir, Square, and Roku. So out of those names, I do not own Roku and I do not own MELI, but I have studied them both, so I feel pretty comfortable looking at them. And hey, if you're on Twitter, so am I. So come over and follow. You can see how big of an impact I'm having in the investing community with my 70 followers. But yeah, touch base on there. I'm always interested in new stock ideas, as well as I use Twitter a lot from a news perspective. All right, we're going to look at these hyper growth stocks, all 5 of them, in 2 ways. One is from a chart perspective, and the second is from a tip ranks perspective. I think charts are important, but for me, they're typically long-range charts that look, across 1 to 5 years. And as most of you know, I spend the majority of my time in fundamentals. But all these charts are going to look the same in the sense that we have this purple line here, which is the 50-day moving average. We also have the orange line at the bottom, which is the 200-day moving average. And I'm not sure how visible it is, but we have the RSI at the bottom, and I keep my RSI range between 70 and 30. So looking at this chart for DraftKings and thinking about hyper growth stocks are volatile, and are we worried in this current market environment with some weakness showing up recently? are we worried that DraftKings is going to take a major dip? Now, on the bright side for DraftKings, they just had a great quarter release, which I'll get into next week. But you can see their most recent activity is in an upward trajectory where they went from $57 during some of the market lows up to 61. And if you can read that white square off to the left, DraftKings is up 31.9% for the year. So very strong look right now. They're well above their 50-day moving average and the 200-day average, which you're just looking for that to slowly build the next level of support. That looks pretty strong. And up here in Yahoo, one of these nice features is like a projected stop loss for DraftKings. They've got theirs at about $50. That feels about right to me. My cost basis is at $35 or thereabouts. So I feel really good with where I stand with DraftKings, and I certainly feel good for the long-term future. All right, taking a look at the TipRanks dashboard to see what the best performing analysts think about DraftKings. And at the end of the day, you've got 3 buys and 1 hold. Price target's not too far away from where we are today, right? So a 65, 67. You did have a hold at 46. Keep in mind that this $46 could just be a pulse of the market and declining support for all hyper-growth stocks. All right, next stock on the board today is MELI, which is MercadoLibre. Current price at $16.38. And you see the chart with MELI from a year-to-date perspective. Looks like they were as high as 1960. And they've since crossed back over the 50-day moving average and sit at 1638 right now. And what's interesting with MELI, in my opinion, is this one is smoking hot from a prospect's point of view. This is a company that does not have a PE or an EPS yet, and I'm pretty sure they are not projected to through 2022. That might be wrong, but that's off the top of my head. But where I would go with MELI, quite honestly, if there was a crash, I could see it hitting this 1500 mark. But if you look on this short RSI chart, which is just year to date, we're already getting to under 30, right about 30 on the RSI, and that would have been at a price of 1613. If you had a stronger market meltdown, then I could totally see another $100 coming off this one. All right, on the TipRanks side of things for MELI, you can see we haven't had a lot of recent updates. You've got an 18 days ago and a 16 days ago, and everything else is at least 1 month old. Now, the last 5 ratings are all buys. This one coming in at 1460 is the low bar. But again, that was a month ago, so it's hard to tell where that person stood at the time. Then you're back into the 2000s, and you have a high from Merrill Lynch at $2,500. And whenever you see a buy without a price target, that typically comes from a long-term analyst, right? Who's just saying, over the future, we expect MELI stock to appreciate. It's kind of a bailout, in my opinion, but on the same token, you get that sentiment here in general, which is buy, buy, buy. So if you do see MELI at $1,500 or below, you might want to pick up a few shares. I certainly would consider it. All right, next stock on the board is Palantir. This is one that I own. Current price, $23.90. And Palantir is definitely a roller coaster ride. Again, we're looking at year-to-date chart. This one hasn't even been in the market long enough to have a 200-day moving average, so that's why the orange line isn't on there. And you can see in 2021, we've reached a peak of about $39. You're well under the 50-day moving average at $23.90. But you're only a 38 on the RSI, so there's definitely room for this one to go down. And I'm going to tell you, just with the volatility of this stock, I'm targeting prices under $20 to add to my position. I like this stock for the long term, but it's an innovation play, and it's an innovation gamble, just to be 100% clear with everybody. I expect Palantir to continue to improve their systems and make a play in the corporate space or the B2B space. And if that works out, which they've already shown progress on, then I think the long-term outlook improves quite a bit. But from a today perspective, and heck, even into 2022, I think you try to get in under 20, and then at that point, don't spend your last nickel on it, right? I'm putting it aside as a speculation play, and I'm happy to do that because of what we've seen software stocks do. All right, on the tip rank side of things, Palantir just had an earnings call, so we've got a lot of updates over the past 10 days. Not all of them positive, though. In fact, you got 3 sells, 1 hold, only 2 buys. Price targets, the majority coming under $20 and under, I'll say. Then you've got a 27, a 40, and a 34. When TipRanks does these price projections, the analysts are supposed to project 12 months out from the day that they sort of type it in or whatever. And to be fair, even though I'm a stock owner and I want it to go up, I don't really have a problem with any of these numbers. I think any of these numbers can happen. I think for $40, just to be clear, you'd have to see some new innovation in 2021, a press release or something. All right, next up, we're looking at Roku. Finished at $395.48 at market close on Friday. Roku's another one that's had a really strong trajectory, in 2020 for sure. And it's even looking pretty good in 2021. Looks to me that the high price on a closing date was $467. Then we started to see the meltdown in the market, and it's crossed over the 50-day average to $395. The 200-day average still hasn't caught up to this stock at $233, and RSI level right now of 48. So there's still some room to chop off here if things got very negative in the market. You can see that Yahoo posts a stop loss target of 347.69. That makes sense to me. I could see Roku getting under 350, certainly on a major market correction. So if you own Roku and you're super nervous that it would ever dip under 350, I would say you have some decisions to make, because I could see this one pretty wide gap between 50-day and 200-day, and you've still got in the 40s on RSI, so support could fall. Don't be surprised if it does, not because Roku is a bad company, but just we are in, fairly volatile market right now. All right, on the tip rank side, we have real fresh ratings 8 days ago, 5 days ago, all coming off their recent earnings report. You've got a few holds, mostly buys. And if I had to eyeball these price targets, I would say your average is probably landing about $525, something like that. So again, Roku over the long term, great investment. I think they still have some good things to do, plenty of good things to do. But if you are worried about taking a hit over the next, call it 6 to 12 months, then I'm just trying to demonstrate here what could happen to the stock. All right, next up is Square, which finished the day at $230. Square has always been a roller coaster, and now that they are so bullish on Bitcoin, adding it to the balance sheet, etc., they are going to see additional volatility with the price of Bitcoin, in my opinion. So if you think that this looks like a roller coaster ride here in 2021, I can assure you that this has pretty much been the way it has been in the past. And now you're going to have the Bitcoin multiple on top of it. So for me personally, I only have a few shares of Square at a cost basis of $214. I am looking to develop the position more. But with all the things I just said about potential volatility, $230 isn't even a buy point for me, to be honest. You see that Yahoo has a stop loss at 204. I wouldn't be surprised in a market meltdown to see this one get to 200 or under again. I would target anything under my cost basis of 214, but even here, this price was 227. You've still got an RSI of 39 at that point. So it's not like there isn't room to go down, right? In fact, let's see what's over here. Here's an RSI 36, and the price on that day was 204.01. So yeah, you get a market sell-off. This one's under 200 for sure. And again, that would be a place that I'm targeting buying if we were lucky enough to see it. All right, on the tip rank side of things, Square did just report as well. So we got plenty of fresh updates 3 days ago, 2 days ago, etc. And mostly buys, 1, 2, 3, 4, 5 buys, 3 holds, 1 sell. The sell coming in at 160. Everybody else is between, looks like 237 and 325, something like that. And bottom line for me, I like Square's innovation potential, but I will say that the past earnings call didn't really blow my socks off in any way. I think that they are going to inherit some real tailwinds in Q2 with additional stimulus and tax refunds coming into the Cash App, which will subsequently turn into, new investors that they'll make a couple bucks off of. So I love the Q2 setup for Square, quite honestly. But in my personal opinion, they have room to go to really get on a major growth trajectory. The key will be the merchant program at this point rebounding in a big way in summer. And then on the Cash App side, of course, if people are out and about doing stuff with friends, then that's certainly a bull case for transactions on that platform. But I recommend getting greedy with Square at this point as far as buying at the bottom. Wait and hold out. I think this stock is plenty volatile enough to give you some really good buying opportunities, but you're gonna have to ride the roller coaster. All right, bottom line, guys, for this hyper-growth stock video, here is my potential crash bottoms. This is my opinion. It is somewhat scientific, but it's also gut feel. So if you wanna hold out for some good prices in these hyper-growth stocks, I personally would consider buying at all the levels listed here and feel good about it, certainly over the next year or so. DraftKings at 48, MELI at 1,500, Palantir at 15, Roku at 340, Square under 200. That's not to say that these prices will happen for sure, but I know a lot of people are wondering right now, hey, the market is kind of choppy. How far could it go down? What if interest rates go up 0.5% out of nowhere? What would happen to my favorite stocks? These 5 stocks that I featured today, I felt like they're very popular. They're also ones that I kind of track and follow. So just for entertainment, I thought I'd put these prices out there and share my thought process, and hopefully it helps you a little bit. All right, guys, I hope you enjoyed this look at the hyper-growth stocks and what could potentially happen to them if we see the market continue to go down. Nobody's rooting for that, but if you're a long-term investor in this environment that we have been in for the past, I'll just say 6 months or so, coming out of Labor Day, you've only had a couple chances to buy at a discount. You had riding into the election, and then the next best time, there was a little lull in January, but you've got now. You've got some prices coming down now, and even if you don't have a lot of money, like I'm personally a little cash strapped right now for investing purposes, just buy 1 share, buy 2 shares. If you already have an established position in something and it goes below your cost basis and you believe in that stock for the long term, do whatever you can to at least pick up a discounted share. Every time you do, your cost basis goes down, and that just means more profits over the long run. All right, guys, thanks for watching. Please give this video a like and subscribe if you enjoy this content. We'll see you on the next video.